Hello and welcome to another update video about Doge. Yeah, on the Doge chart, the idea is we're at a critical juncture, really. Quite interesting at the moment. Similar situation to Bitcoin. Very, very important juncture because what happens maybe today or tomorrow could decide about what Doge is or which pathway Doge is going to follow in the coming weeks or the coming week. We have two scenarios on the chart. They are both at the moment bullish. One is short-term bullish, one is short-term bearish. And it's really just a question of, okay, which direction do we break out? And then we can follow the pathway either in yellow or in white. The parameters I defined in the last few videos were respected. So you can see that they are very relevant and the price hasn't really moved significantly. It's just trending sideways. However, we've seen initially the price come down after this high, which we call the B wave top. Then we had a wave 1 to the downside in the yellow count. Let's start with that short-term bearish scenario. So which should actually be a wave C of 4 to the downside, which could send the price back into the orange support region. That would also be in line with Bitcoin's short-term bearish scenario. In this scenario, we have a wave 1 down, a wave 2 up, and then this is an A, B, and the C wave could be next. The C wave would be a 5-wave move, and maybe we've seen here a 1-2 setup of the C wave, of wave 3. Then we should see a 4 and a 5 to complete this move down. For this scenario, I communicated before that we're likely in an ending diagonal. Ending diagonals mean we have to be prepared for frequent wave count changes and adjustments. And it also means that we have to expect sometimes corrective rallies like this B wave rally. But I highlighted that ideally this B wave gets rejected in the resistance area, which it actually did. That's what I mean with the parameters are being respected. So 19.6 to 21.2 cents was the resistance area. The idea was to get there rejected and then come down. I did say to you though that, okay, it's possible. There's another juncture here, another pivot that the price needs to break below to confirm further the yellow scenario. But that until we break below it, here 17.5 cents, the white count is a reasonable assumption and reward to risk is obviously then quite favorable for the white scenario in the orange support zone for a 1-2 setup, and we could rally higher in wave C. That already takes us to the short-term bullish scenario. Short-term bullish means the wave 4 actually bottomed already here around the end of March, and we had an A wave up, a B wave down, and this is now a C wave up, and I presented you with a setup for the 1-2 setup in the white count. I'm fairly neutral about which one it is that's playing out, but key is to understand the relevant levels and parameters and where risk is low and reward is high. And again, as I said, the market is respecting the parameters, so we have to consider them both. This scenario suggests that, one second, we might have seen here a 1-2 setup. Now, I'm leaning towards the yellow count, okay, but still presented you with a support area which the price bounced from. So I often say that even if the alternative scenario is playing out, or even if the primary is playing out, but the alternative can be a good trade sometimes, because it's all about positioning yourself close to the relevant pivots, right? So yeah, reaction to resistance, reaction to support, which means we don't really know more now about is it yellow or is it white. But this move down looks more like a 5-wave move to me. It's a bit interpretive, of course. So we want to have the facts. So it takes a break below yesterday's low, which formed at, basically 18 cents. To confirm that the yellow count is playing out, then we should follow through in wave C to the downside of wave 3. And then do another 4-5 pattern and reach 14 cents at least. I would prefer that, but as long as yesterday's low is holding, for anybody who wants to play the white count, I mean, it's reasonable to set stop below the wave 2 low, because this is, it's not high probability. Probabilities are fairly balanced, so it's not a great setup, but still though, it's a reasonable setup and a reasonable scenario to expect upside. It also depends on what, which one you believe. I can present you with the objective levels and the invalidation points, and the invalidation point for the white count, is 18 cents. For the yellow count as it is, the invalidation point is 21 cents, pretty much 20.9 cents. So if we break above this high that formed on the 8th of April, then it's likely that we're following the white count. So that's sort of, for anything else, you need a crystal ball. You don't get more clarity out of this chart. We have very clear parameters we can watch. the resistance area was respected and the support area. That's essentially exactly what we want, because in both, both can be used for trading, but it's now a matter of, okay, which direction does the market really choose? And if we're looking for clues in the microstructure, well, for me, this looks more like a 5-wave move down. So I'm leaning towards yellow, but that doesn't really add, many probabilities, or it's not like, it's a microstructure that, they are very fragile. So yeah, that's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, and please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.